What's up, everybody? Welcome back to Trading Wars. Thanks for joining me today. Today, we are going to be reviewing SPY, talking about the setups, having a good time. So if you're ready, let's step into the war zone. So first and foremost, guys, why don't you let me know where you're tuning in from tonight? Let me show you some love and appreciation. Throw your name up on the screen, and then we'll be breaking it all down, okay? So while you guys are throwing your names up there, let me go ahead and draw the previous day's high and low. So here was the previous day's low. Oh, that's interesting, isn't it, guys? Look at that. Here's the previous day's low. Here's the previous day's high. Boom. What's going on? Mauricio from El Salvador. Roman, what's going on, my brother? Trading Wars Army Spy VIP in the building. Tom, Trading Wars Army Spy VIP. Arizona, what's going on? Yariel, Dominican Republic, what's going on? Wei from Brooklyn. Chris, what's going on, brother? Massachusetts, what's going on? Kanika, Trading Wars Army in the building. ST, San Francisco. Sharky, Minnesota, Trading Wars Army. Monique from Chicago, good to see you. All About Angie from Texas, what's going on? Todd from Santa Rosa, what's going on? Sundarm, Kitchener. John, Lakewood, what's going on? Ulysses, Ventura, California. And let's do one more. Mario Pizza Party in the building from Texas. Woo! Okay. And you know what, guys? I'm going to talk about the plays, but I want you guys to pay attention. There's something very special on this chart, okay? I'm gonna test you guys. I'm gonna write this down. What setup was the same today or similar as it was yesterday? Okay. I'm testing you guys, all right? I'm gonna put that up right there. And there's something very interesting about this chart. And I want to test you guys. That's your question, okay? Edgar from Vegas, Trading Wars Army in the building. Melly, Trading Wars Army Spy VIP. Good to see you. Okay. So we're going to hit the replay. Boom, 3-minute chart. So the first trade we took today, guys, you can see we had the large gap down because of Facebook right there. And because of that, guys, I wanted to take an opening range breakout. You're going to see my commentary right here. Boom, 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 boom. All right. So good morning. Massive gap down off Facebook earnings here. So this was today at 9:27. I'm going to try the orb 3, 5, and 15. And then you could see at 9:33, we took the short. So check this out, guys. So this was a real ride today. This was a real ride, guys. So first 3-minute, I'm going to have to go down to an even lower time frame for you guys to see this because that's how crazy it was. So we're going to go to the 1 minute, okay? So we're on the 1 minute here. Let me zoom in right there, guys. And we want to short below this low right there, okay? Because we know we gap down. We know, so let me make this in red. So we know we gap down. We know there could be a lot of momentum. So we say, okay, we want to take that short right off the bat, okay? Boom. There's the fill on the short. Stop loss is up here, right? There we go. So now we get the rollover. So that's your good push right there. And then it just immediately reversed. So got a quick scalper here. Nothing too amazing. And then we set up this 5-minute opening range breakout, which was the next beautiful play. Okay. So we had that push there, push there. And now I want to talk to you about the $150 play. I'm going to explain this to you guys in detail. So there's two things, the Fibonacci on the open gap, as well as the right here. So this was the play for the $150 on futures, a really nice, simple one. So critical point here, guys. So you could see here, let me get to this point on the chart. So if we go here, boom, boom. So this right here, guys, really caught my attention. This was very, very key. And I want you guys to get the pen and the pad out right now. I want you guys to get a pen and a pad out right now. I need you to write this down because look at this very closely with me, okay? The low of the first 5-minute bar was 450.01, and the low over here was 450.03. And then if I play the next bar right here, guys, the low was 450.01. So we had exactly the same low, 450.01, 450.01. So I was paying attention to chart. When I saw this right here, guys, this was like, okay, there's somebody here. There's a buyer stepping in. Why are they defending the 450 level so much? So you could see right here, this is what I wrote. critical point here, guys. The bull trying to defend the low of the day. You can pick up some longs here with a tight stop at the low of the day. So this was the banger right here, guys, because you can see after that, watch this. Bam, 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 bam. Beautiful. So that was a beautiful, nice little push. So that was a $150 play here. Show you. Oh, we didn't post it in this channel. 1 second. Let me go and pull it up on the Twitter. So that's specifically for the small accounts. So you could see here, Derry posted his recap today right here. So it was $132, guys, off of that with 2 MES contracts. So I think with Derry though, for my call out, I use this as a low, but for his call out, he used the fib. And let me show you how to do that now. Okay. So with the fib, what you want to do is you'll always want to wait for that first push of the day. So you could see here, we had a clear vertical push, right? And then you need at least 2 or 3 candles, at least 3, I would say. Okay. And then what you did here, you draw the Fibonacci from the low to the high. And I believe Derry you got on the 618, right? Okay, so he went here on the 618, and this is why it's so important to have a good stop loss, because the stop loss was literally below the low of the day. And if the stop loss was not below the low of the day, guys, you would have got stopped out. So this was a really, really critical turning point, because you could see here, look, low 450.01, and then here low 450.01. So that was a beautiful trade. And that was really, really clean. And then let me show you guys something. So I taught you yesterday how to draw the Fibonacci on the gap, right? And look at this now, guys. You're going to be surprised. Check this out. I'm going to do the same thing. We're going to take the Fibonacci, right? I talk about this in my book, from the closing bar from the previous day down to the low of the day. Now check this out, guys. So we come in here, okay? We push up, we start going sideways. See this rejection here? Look at this closely. So this is exactly what we talked about yesterday. Look at this closely. Okay, watch. 382, bam, bam, bam. 3 wicks in a row rejection. Okay. Again, we come up and we test it. And this one here, guys, was the beautiful play. Because when you get a Fibonacci here, like the 382, and you get an inside bar, it doesn't get any better than that. Because now you have double the trouble. You have a rejection on the fib and an inside bar. So just taking the break below this inside bar, if you didn't already take it over here, check this out. Boom, 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 boom. Beautiful. There we go. See that, guys? This is exactly what I taught yesterday. And I hope some of you guys banked on that one, because that one was really nice. And now let's get back to the question. What setup was the same today or similar as it was yesterday? Now check this out, guys. Look. So this was yesterday, the 2nd of February. Look where we bounced. We bounced at the previous day's high long, because the previous day's high can become support when we gap up. Now check this out. Where do we bounce down short? The previous day's low. Here's the previous day's low. Look at this exactly, guys. Look at this. We come and we touch it. What's the low of yesterday? The low of yesterday is 453.06. What's the high right here? The high is 452.97, right? And what you can see here, guys, is you get an inside bar confirmation. It's really nice when you get the inside bar, because the inside bar represents the pause. So imagine this. You're coming up to a brick wall. Here's your brick wall. You reject it 1, 2, 3 times, and you come back again, and it just pauses. Those are the best trading opportunities, because when you look at it like this, guys, if you take a short here, you're only risking the high of the day, which is right here. You're risking the high of the day. Okay. You're using the high of the day, and look at this gain potential. Okay. Look at that. 10 times your money, 11 times your money. That is the beauty of combining the fibs with the fractal bars. And I would say probably, guys, that is my best work. I would say that's definitely my best work when I've combined the Fibonacci with the fractals. Hit me with the 3 if you're hit me with the 4 if you're following me right now for the 4 horsemen. Let's support the 4 horsemen here and let me know what you guys think. And then I want to show you guys some more fib stuff. I feel like, my passion has always been the fibs. Sometimes I hold back because it's a little bit complicated, but the more I teach you guys, I'm hoping the more it's going to sink in. Generally in gaps, there's going to be 2 types of trading. It's going to be the gap fib is always going to be important. okay, the gap fib, and then you can use the previous day's range as an extension, right? Like if we use the previous day's range here because we open lower like this, see, you can see, look, we're tagging the 50, 50, 50, holding it, okay? All right, so now I want to show you guys. I also did take a Trading Wars butterfly on Bank of America. I'm going to show you guys that one too. So let's just line up these fibs now. Let's talk about this. So we know that we had a solid support here at 450.01 that held in the morning. So if we draw a fib from low to high like this is what I really want to show you guys, okay? And it's kind of crazy, but let's do it together. So here's the low. So let me put this on 450.01, and the high right here was 452.34, okay? Now check this out, guys. I don't know if you guys are going to believe this or not, but here. So we have this move, this pullback, and we trade, guys, exactly to the 272 extension. Do you see that, guys? That's the penny. Angie, yes, you can DM me your question, Angie. Thank you. Or you can ask here if you want, because you're Trading Wars member. Go ahead. You can ask right here, or you can DM me. So you see this, guys? We have the Fibonacci. We trade to the 272. You see that? This is pretty insane when you think about it, guys. Exactly to the 272, and we roll over. So now check this out. So that's part one. When we break the 450, when we break it, the bull is dead in the water, because that was the bull algo. So the bull algo, it already made the money. When I mean dead in the water, the bull already made the money. Think about this. It took it from 450 up to 452, 453. So it's good. So when we break this low right here, when this low gets broken like this, now we draw the Fibonacci the other way. And how we're going to do that? We're going to take it from high to low like this. And watch this now. Watch this, guys. Remember how we were talking about 382 on the gap fill? But what about this? Check this out now. 1, 2, 3 rejections on the 382. Beautiful. Okay? So very clean Fibonacci legs have been playing out every single day. The market is becoming more and more robotic, algorithm driven, and you need to know these. You need to know how to draw the fibs. You need to know the pivots, because that's where things are moving. Okay, it's not a coincidence that 38.2% of the gap fill is where we roll over, and it's not a coincidence on the short side 38.2 is where we roll over for the short. It's the same algo. Does the SPY book also go into the fractal technique as well as the Fibonacci? Yes, it does. It does. Yes, it does. But the Fibonacci book goes into like complete beginner level Fibonacci's. Okay. So hit me with a 7 if you guys follow me there. Hit me with a 7 if your mind was blown there, guys, because we are going to be trading a lot more Fibonacci style, because one of the main reasons is the Fibonacci has such a great risk to reward. And then let me just ask you a question. Let me just ask you a question here, guys. So if you see how we took this 272 here, if you try puts right here, what do you think? Do you think that's a good place to try puts? Hit me with a 1 if you think that's a good place to try your puts. Hit me with a 2 if you don't. What the Fibonacci is allowing us to do is to predict where the price is going to go. Okay. And when it gets there, guys, we're already there. We're waiting. Like we're at the train station. We're waiting for the train to come in. Okay. And I'm going to show you another example that we did on Bank of America today. But this is the power, because you can predict that. You can set an order in the broker. Okay. When you touch the 272 Fibonacci, I want you to go ahead and buy me puts. That is life-changing. I'm telling you guys. Because it options, right? Like, okay, check this out, guys. I wrote this book, Fibonacci and Options Mastery. It's called the Golden Partnership. It's a golden partnership. Why? It's a golden partnership because of this. Options love to decay and love to move like very volatile. And the fib is already telling you where it can be a reversal. So you don't want to really buy a breakout unless you have good consolidation on options, because the breakouts are going to be very extremely highly priced. If you bought calls right here, you are going to be paying a heavy load. But if you bought puts and you know where the potential for the reversal is, that is the golden partnership. Okay, there we go. Let's move on to Bank of America now, and I'm going to show you a trade we took with the fibs. Boom. Okay, so what I'm going to do here, guys, is I'm going to go really, really slow here. And I'm going to show you the trade we took and how it played out and all that stuff and how we could get better, etc. So this one, I really want you guys to take some notes about. I really want you to take some notes about this. So hit me with a 9 when the pen and the pad is out. You take the Hennessy and you put the lid on it, and you just put the bottle away right now, because this is game time right here. I'm going to show you guys something right now, step by step, and I'm going to show you the trade that we took on Bank of America, everything, okay, clean. So hit me with that 9 when the pen and the pad is out and the Hennessy is tucked away in a safe place. Okay. All right, there we go. I see the pen and the pads. So there we go. First bar comes in. Bam. Bank of America. Very powerful, big bear bar, right? Next bar comes in. Boom. Okay. So there's this is a holy grail, right? We have a big outside bar followed by inside bar. So one of the things that I taught you guys, this one is an optional trade. You definitely don't have to do this one. It's a little bit more advanced, but this is called the micro fib. So micro fib is a fib basically on a candlestick, right? So what we're going to do here is we're going to take the Fibonacci of this big 5-minute bar right here, because it's such a big bar. So that means there's going to be a lot of algos in this bar, because it's a big enough bar to have a lot of buyers or sellers inside of it. So here we go. Boom. Check this out. So we have this big push. This is a micro because it's only one bar. We hit the 618. Bam. We roll over. We make a new low. So this is even before the morning leg. This is that micro leg. You see, do you guys see how perfectly we tagged the 618 right there? Like this is, I can't make this up, man. I can't make it up, guys. It's, you go and pull out a chart. Pull up a chart and do this. So this is a micro fib. It's really good with big, solid, powerful bars, big ones, because you know that big bar, that there's a lot of volume behind it. Hit me with a 2 if you're following me on the micro fib. Let me write that down. So this is going to be the micro Fibonacci. Okay, this is not the one we took because I was busy on SPY, but I'm going to go ahead and write that down. Okay, so let's proceed. We continue, right? So we made that low. So when we make this new low here, guys, now I want to take my anchor and pull it out, because now I'm going for the morning leg. I'm going for the morning leg, okay? I'm going for the morning leg now. But once you make a new low or a new high, you got to move your anchor. We continue. Okay, we pull back up now. We go back and retest that 618. Okay, and then we get another rejection. Start going sideways for a bit. And now this is the butterfly part. Okay, so I think I went too far. Let me replay again. Okay, one sec. Sorry, guys. I wanted to do it right there so I could show you guys a point. All right. So now, remember, the bear algo was the short right here, and the high of that candle was 447.09. So this wick right here allows me to see the butterfly coming. This wick breaks it. The high was 47.09, but this wick goes to 47.11. So when this bull power comes in, say, okay, the bear is satisfied. The bear already did a 618, made a new low. It's happy. And we came back, and anybody left over is probably stopped out on this position. So when this happens, guys, this is what we'll call the Trading Wars butterfly. So what I'm going to do now is I'm going to take the fib from the other way. And this is the trade we took. Okay. I'm going to take the fib from the other way. So when I mean the other way, I'm taking it from the low to the high. Okay. Like this. And if it goes higher, I'm just going to move my anchor higher and higher and higher. And the entry, guys, here is on the 50%. So if you're taking options, right? If you're taking options, then you want to just take a full risk, maybe Friday expiry, put your order to trigger conditional order when it hits the 50. So when it hits 46.92 to buy you the calls. And I'm going to show you guys this, okay? So we go, bam, okay? So you see how we made a higher high? So I'm just going to move my anchor up now like this. I'm just waiting for the dip. I'm waiting for the dip to come in. So now my entry is here. I'm waiting for the dip to come in. There we go, bam. Okay, so we got filled right there, guys. Check this out. So when we got filled here, let's pause. Let's pause. I'm going to slow down. Hit me with the 4. Hit me with the 4 if you would be scared right here. You got in, you're long in the trade. Would you feel scared? Hit me with the 4. Hit me with the 5 if you feel confident. Hit me with the 4 if you feel scared. Right? So this is the butterfly that I've been working on. How do you feel if you're in that trade right there? But the main thing that I want to point out to you guys is this. When I took this trade, guys, when we got in here, I am in before anything, before the candlestick shows that. It's just strictly the Fibonacci. I am just going on a fib. I'm not, does that look like a bullish candle? No. Right? So here we go. Next candle comes in here. Bam. There we go. First target hit 1-to-1. The next target is at 1.5, which is right here, right around here. Okay, so that's 1-to-1 hit on that inside bar. Then boom, boom. Okay, we come back to the 50 again. There we go. Okay, so caught that 1.5 there, that last little piece. And I wanted more. But I did, once I hit that 1.5, I put the stop loss to break even. That's the rule that I have with the butterfly. So the stop loss is at break even, guys. And you'll see that, let me just fast forward this. We rolled over after that. But still made money, guys. Like, look, you look at this chart, you say, man, this thing is just bare. It's just rolling over. Like, there's nothing happening. There's no way you can make money long. But those are the little details, guys. I'm putting in some crazy work right now on this right now. Okay. It's not for everybody, guys. I'm telling you, this one, you got to put in work. It's not, you got to watch the YouTube videos on the fibs. You got to really understand the algorithm style of trading. And the last thing that I want to show you guys, this is just an easy one, right? So remember I said we had the morning leg still from the high to the low right here. Check this out. Okay. So if you don't want to play yes, I played the shares. If you don't want to play the butterfly, which is the other way, then what you could do right here is just stick to the traditional one push leg. So here's the push down. Here's the pull back up. You could see we reject the 786 1, 2, 3 times, and then we roll over. Okay, so that's also, obviously this one looks really nice, but the point is that the butterfly seems to be very high probability, but it's not a very common pattern because I was looking for them all day of trying to find them. This is the only one that I could get. All right. Wow. So there we go, man. That's epic right there. Hit me with a 9 if you guys are following me there. Really nice fibs plays here. And I'm going to talk to you guys a little bit more about the fractals, those inside bars. And I want to talk to you guys a little bit more about that. So, for example, let's say we have, some of these inside bars here, right? And you could use the fib, for example, right? And you could, if let's say you want to have a directional bias, okay, let's say you want to have a directional bias. Let's say, hey, I want to play this short using the morning leg Fibonacci, and I'm going to use an inside bar to give me the extra confirmation that I need. But now you have a bias. Now you say, look, I'm only going to short these inside bars. So this inside bar comes up here, it breaks the high. This one comes here, it breaks the high, right? But what you can do is wait for one of the lows to break instead. You never take it long. And the way that you will do that, guys, is using the Fibonacci as your stop loss instead. So that will allow you to have your stop loss. It's not going to be so tight on the bar itself, but the stop loss is going to be on a Fibonacci. Like, let's say you could, if you want to be very safe, you put it at the high of the day, or you can come down on some of these fibs down here. Okay. And I would recommend the 886, right? I don't have it on my chart right now because I'm testing some other things, but the 886 is one of my, that's why my book is $88.60. Really good place to have some of those fibs. All right, so we had the SPY trades. We took this one, And then we did the midday scan, and we were watching Twitter like a hawk. Right? Like Twitter was the play that I was really focused on. And you could see we had the double inside bar, and then we had all of this. And I did not take Twitter because I was waiting for the butterfly. I was waiting for it. I didn't get it. So thankfully, we didn't take any of the midday option plays today. There was a lot of chop. But I'm pretty sure, guys, tomorrow there's going to be a lot of fireworks. We had Amazon earnings, and it's Friday, Lotto Friday, so you can expect there to be a lot of fireworks tomorrow. So what I'm going to do here, guys, is that's pretty much it. That's my lesson for today. I hope you learned something there, and I'm going to continue to really explore these fibs and just keep working at it. Just trying to get better every single day. Find ways to automate those. When I take these Fibonacci patterns to the higher time frames, like the daily, the hourly, and the monthly, the weekly, it's going to really break the game. I'm very confident in that. But you always the problem with the higher time frames is sometimes the Fibonacci plays, they take so long to set up. So we're talking about days to months to years, man. And I don't really have the time to just sit and wait. I want to be trading here on the 5 minute and trying to take these patterns the best that I can. All right, guys. So look, if you like what you hear about the fibs, I have a complete Fibonacci playlist on YouTube you can watch. I also have a beautiful book right here, guys, $88.60. You get 1 month for free in the room, which is probably the best deal you can get, guys. Watch this one right here, free video, Fibonacci Trading Course Part 1 at tradingwars.com. If you want to trade with me live, I will be live again tomorrow, guys. Like you saw on SPY, I called out some beautiful winners today. This little double bottom play was really, really nice, and we did really make some good money on that as well. And you can definitely just sign up for the rooms here directly if you like. We're going to be going Lotto Friday tomorrow. We're going to be going hard. So tomorrow I'm going to be trying to make some money with Lotto Friday. I love it because it's a good risk to reward on a Friday. You either blow it up or you double or triple it up. So that's what we're going to be looking for tomorrow. So listen, thank you for your time. I appreciate you guys being here. I appreciate you guys that are always here and supporting me. Do you recommend Fibonacci or SPY book? The SPY book is more of a beginner's book. The Fibonacci is definitely more advanced. So there is stuff on Fibonacci in the SPY book, but not as advanced as the Fib book. So if you're really, really new, I would start off with the SPY book, work your way up to the Fib book, and watch the videos. Okay. So this is what I want you guys to do right now. I'm going to end the broadcast. Leave a comment and let me know what you guys let me know what you guys think about the butterfly. Like, what do you think about that? Or just leave a comment on what are you confused about the most on the Fibonacci. Like, what is the part you don't understand? Let's try to do some more Fibonacci videos because it's very, very powerful. Everybody needs to know this because you guys will see it. Like when I draw it, you see it's like, man, I wish I knew that. And I want to make sure you have those tools, guys. I want to make sure that you're not just blindly doing things because you're trusting your gut or you're listening to the news, because that is probably going to make you end up bankrupt at the end of the day. And we've all been there. All right. Thank you very much. I'm going to end the broadcast here. Don't forget to comment. You always have a chance to win a giveaway. The giveaway will be this Sunday on our Sunday Stock Talks. Okay. Thank you very much. Take care.